How to get pre-approved for a home loan. Have you heard that now is the best time to buy a home? Prices are stable, interest rates are super low, so you can get more house than you would ever gotten approved for before. Well, now is the exact time to do it. I'm gonna share with you exactly how to do it. Let's go.
Noel. Yeah, she can fix that. If you gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
So when we were talking about buying a home, there is a very complicated process that most people get caught up in. It is not very difficult. However, it is very unfamiliar for most people. I worked in mortgages for over 18 years and in real estate, so I know everything there is to know about the traditional mortgage world. And now as an investor, I could tell you all about the investing world. But when we're talking about just a traditional mortgage loan and getting pre-approved so that you can go out and start shopping for a house, the process is pretty much the same as if you would have already found a house. That's kind of the trick to this. So let me quickly explain that to you. When you are purchasing a home, the first thing that you want to do is get pre-approved for a mortgage. The reason why you want to get pre-approved is because in most cases, you're not buying the house cash. I mean, if you are, you could probably turn this video off. You got, $300,000-$400,000 and you want to buy a house cash. I wouldn't recommend it, but if that's what you want to do, go ahead and do that. In most cases, like me, like most other people, and I have tons of homes and I still have mortgages, you're going to have to go through the process. And when you submit an offer to buy a home, so for example, say they're selling this house here and they want, $300,000 for it, you're going to not only submit an offer to buy it for $300,000, you're going to have to submit proof that you are approved for a loan for $300,000, okay? Or the loan that you're approved for plus your down payment qualifies you to buy that home, or you're going to have to provide a bank statement or, proof of funds to show that you have enough cash to buy the home for cash. Again, in most cases, you are going to have to show this before they will ever even look at your offer. Because when someone is selling a home, they want to make sure that the person that is making an offer on it can actually buy the home. So what we do in the mortgage buying process, in the home buying process, you put an offer on the home and you also send in your pre-approval letter. So let's talk about how you get that letter. So like I said before, you're going to be submitting an offer. You want to buy a house, but before you ever go find and shop a house and decide what neighborhood you want to be in, you want to make sure you get pre-approved. But there is a difference between a pre-approval and a pre-qualification, and I'll quickly break that down for you. A pre-approval is where they actually look at all of your documents. They will look at your pay stubs. They will look at your tax returns. They'll look at your W-2s. They'll look at your assets, your bank statements. They really pre-approve you. They will look at everything the same way as if you had already bought the house, already put the contract, and you were going to buy that house. They will pre-approve you. A pre-qualification is a little bit less. That means they're just going to go ahead and give you a pre-qual. They'll pull your credit. They'll ask you questions about your income and your employment. And if you generally meet the guidelines, they will give you a pre-qual letter. Now, a pre-qual letter and a pre-approval letter are very different, but most people don't necessarily know the difference. You want to make sure in this video, what I'm teaching you, you are getting a pre-approval. This will stop headaches and this will help you avoid a situation where you have put an offer in on a house, you've put money down, and now they are telling you you can't get approved. You can avoid all of this altogether if you follow what I'm telling you next. So let's talk about what lenders are looking for during that pre-approval, because this is super simple. Again, this is just like you are applying for a real mortgage. You are going to have to supply all of your income documents. If you are employed, they're going to want to see your last 4 pay stubs for a month. They're going to want to see your last 2 months of bank statements. They're going to want to make sure that you have been employed stable with no gaps for 2 years. And they're going to want to make sure that you have all of the money saved in an account, in your retirement account. Again, that you have enough assets for your down payment and some reserves once you get that house, and to make sure that you have a little bit of money saved and put aside. So this is what they're looking for. They want to make sure that you can literally pay back the loan. Lenders don't actually care about, all of this other stuff, who's tall, who's short, who's fat, who's skinny, who's, black, who's white. None of that matters to the lender. They are looking to see, does this person make enough money to repay this loan? Do they have stable employment or income to repay this loan? And do they have any money in case something crazy happens to their employment or income? Do they have some money to save, saved up in their saving pattern so that they can save money and still pay for this house and the expenses that goes along with home ownership? That is it, guys. Lenders want to make sure you can repay the loan. So one of the things that you want to make sure that you're doing in the pre-approval process is showing them that you have that ability. So before you ever go to a lender or a bank, think about that for a second. I literally just told you what lenders are looking for. Do you have stable employment? Do you have 2 years? Do you have enough money? How much money do you make per month? What are your bills? Do you have a car loan? Do you have student loans? What are your other debts that you are going to have to manage with this house note that you are going for? These are the things that you need to look at and decide and know before you ever start working with a lender. And it's so simple. All you have to do is do a self-assessment and answer the questions that I just asked you. So now that you know what lenders are looking for, again, before you ever apply or get your credit pulled, you can find out what each lender's criteria is before you actually apply. You literally can call up the bank, for example, and this is, again, I don't necessarily recommend you going to a big bank like Bank of America or Chase or Citi and things like that unless you have an established relationship with them. Now, if you have a checking account and you've been dealing with banks, those type of banks for a while, then that would probably be a good fit for you. But if you bank, for example, with a credit union and then you're going to go to Bank of America and ask them for a mortgage loan, that's probably not the best thing to do. If you bank with the credit union and you've been banking with them for many years and that's who you have your checking account with and your savings account with and all this other stuff, then that's probably who you should apply the mortgage with. If you bank with Bank of America, again, just using that as an example, and you do have your checking account with them and all those other things, then yes, I would suggest that you apply with them. So it really is where you already have some of your banking at is one of the first places that you want to start. But if you have credit issues, again, if you don't have a credit score that's over 680 in the 700s, you probably don't want to go to either of those two places. You might want to check with a mortgage broker, okay? A mortgage broker is someone that has access to lots of lenders and they know lots of lenders' guidelines, they know their rules, they know what to do to get you approved at each lender, and they will put you with the best lender for your situation. So instead of you applying at all of these different places and getting declined, you can go to a mortgage broker. That one person looks at your credit, your income, your employment, your assets, and they decide which lender you have the best chances with. Additionally, you don't pay the mortgage broker any money unless the loan closes. So it's a benefit for them to get you approved with the best terms at the lowest rate and get you approved, not just get you declined everywhere, because if they get you declined, they're not going to make any money. So this is a great option if you feel like you don't have stellar credit or you have some issues. You might want to find you a local mortgage broker with access to at least 5 different lenders, and you can ask them, how many lenders do you have access to? You ask that question before you ever let them pull your credit. Okay, so now there you have it. I have spilled all the tea. I've given you all the information. You know exactly how to get pre-approved for a home loan, okay? It is a simple process. I have done it many times over and you can too. Make sure you watch all of the videos in this playlist. I'm giving you all of this information so that you can be successful. I want to make sure you have all of the resources, all of the tools, and all of the knowledge that you need. This is Noelle. To your success.